Zambia's economic growth is set to accelerate further in 2013. That's to 8.3% from an estimated 7.7% in 2012, with activity receiving considerable support from public and private investment. For more on Zambia's economy, for Nigeria's IFC bond issue, and for what's taking place on the Kenyan bond market, we're joined by Roy Daniels, Head of Africa Trading at RMB. Thank you so much for joining us, Roy. So let's start off with Zambia, because we know the growth is there. Certainly 8.3% is fantastic growth, but there have been a lot of regulatory changes, the one being, of course, the rebasing of the kwacha, knocking off at 3 zeros. Talk to us about the level that you see the kind of central bank comfortable with the kwacha moving to right now, because they used to intervene at 5,300, so that's now the equivalent level 5.3. So what are you seeing from the market?
We saw it actually head up to 5.40 and no intervention by the central bank. It seemed to find a ceiling and it came up from there. We saw mines coming in selling some dollars. Whether the mines were sitting there waiting for signs of the central bank and then they'd sell into a firming kwacha, it wasn't the case. They just came in. There was no central bank activity. They came in and sold some dollars. So is it now a psychological level? Is the central bank now saying, well, now maybe above 5.4 would be our level? We're not too sure. They're keeping their cards pretty close to their chest at this stage, the central bank. Other than concerns around speculation, other than concerns around brokers involved in the market leading to the weakness of the market. At the end of the day, the kwacha is weakening because there's more supply and demand. I mean, we see some great growth forecasts. Hopefully that leads to some consumer spending, hopefully leads to some inflow of funds. The concern has to be that if the central bank continuously makes changes to the regulations in country, that the foreign investors buying into the bond markets get scared of the market, go elsewhere.
Are there more changes on the cards? Because there have been so many changes already.
Unfortunately, with the central bank, in Zambia, they're unpredictable at the moment. So they might come in and they might change the open forward position. So you allowed X percentage of your capital as an open position. They would then say that's reduced to 1% or 0% and cut back the speculation in the market. Their concern is the weakness of the kwacha. But I think that they're possibly leading a bit of a witch hunt and saying, you know, those naughty speculators are the ones where in fact it's supply and demand.
Well, interesting changes taking place in Zambia, and as you say, investors are slightly on edge around that, but certainly not on edge about investing in Nigeria right now. If you look at that IFC bond issue, I mean, 12 billion naira auctioned, 1.5 times oversubscribed. Your thoughts on that, and also the yield that they're offering on that?
Fantastic. Again, AAA rated Nigerian exposure. The offshore market's going to chase after that. As you saw, as you say, 1.5% oversubscribed. Coming in just slightly lower than the 5-year bond benchmark. So I think locally the guys would look at it and say, from a local bank point of view in Nigeria, they can get 10.9% on the 5-year bond, or 10.2% on the IFC bond. They're going to go for the local bond. From an offshore point of view, AAA rated asset you can buy versus a BB minus rated country. It makes absolute great sense for them to step in there and buy it. And I think if we haven't got the full breakdown of it just yet, but there did appear to be lots of offshore demand for it. But Nigeria, it remains the flavor, whether it be the football, whether it be the country, whether it be guys buying the bonds, it's going well for them.
Yeah. I mean, are there going to be more bonds like this launched, where you have AAA rated bonds being launched in local denominations? I
think the IFC is going to do more. Certainly think it's a way to provide some local currency funding on an offshore balance sheet, but I think there'll be some more listings through country. I think.
Where do you think? I mean, which countries? Kenya, Zambia?
Kenya. I think post-elections, definitely. I think we'll see something there. If not the IFC, I think we'll see a Eurobond issue by the Kenyan central bank and government. So that will definitely come up, but it'll be post-elections. I think you know, prior to elections there'll be an electoral uncertainty attached to the bond, and that's going to make it a slight premium. But I think post-elections, and we've got to see exactly how that pans out. I think in April time we'll see more talk of it. Ghana, possibility, but yeah, I think Kenya would be my pick.
But at the same time, the Kenyan government is wanting to launch that 15-year bond, looking to raise 15 billion shillings on the 20th of February. So that's before the election. The coupon there set at 11.25%. I mean, what type of demand will come through prior to, of course, an election which everyone's very concerned about?
there's a lot of cash floating around in the local market. So I think there'll be a lot of uptake from the local banks. There's a mopping up and a repo taking place by the central bank on a daily basis at the moment. So there is cash about. I think they need to mop up some of that. There'll certainly be strong take up from the local banks. From offshore, I'm not 100% convinced there'll be a lot of offshore interest. I mean, from our trading position at RMB, we certainly wouldn't be wanting to buy it just yet.
Just very quickly, 11.25% in Kenya. As you say, you're not going to buy that one, but would you be going for the Nigerian bonds at a slightly lower coupon rate?
Yeah, I think so. I think there's with Nigeria, we haven't had any changes in policy, changes by the central bank. The currency is stable, the yield is good. You go in there, you know what you're getting. When you want to get out, you know how you got to get out. You know which exchange control regulation is required to get out. People like that. They like stability. Similar picture for Ghana.